Earnings in focus for Halliburton. Shares in focus this morning after releasing its latest quarterly report card. Now, it was a mixed bag for Halliburton. Earnings beat at $610 million, 68 cents a share, 77 cents a share on an adjusted basis. Revenue came up short at just under $5.8 billion. So you're seeing the stock get dinged as a result of that miss there. Stock down a little over 8% in terms of Halliburton. So, they have some challenges in front of them. But I mean, one thing that could be helpful in the long run is the price of oil.
Yeah, price of oil, which is actually crude right now, up on the month, up about 6%. So demand seems to be improving on that side. One thing that stood out to me from this release was that North America revenue fell sequentially, 2% quarter over quarter to $2.7 billion, while international revenue actually increased 7%, led by improvements in Latin America, Argentina, and Mexico. So more drilling overseas than in the U.S.
Which makes sense given the forecast from OPEC, which they predicted that demand would still be there.
And Halliburton, as an oil services company, like the oil majors, is continuing to try to support its stock by returning cash to shareholders. In its case, it bought back $248 million of stock during the quarter. It also highlighted its free cash flow in the quarter of $798 million. So this is, you could argue that this creates a floor under many of both the oil exploration and production and oil services stocks that they continue to pay out to their shareholders.